guys, it's me, Teresa Perrin. I want to go over some of the facts regarding Bed Bath & Beyond and whether I think that this is game over for this play or is this an opportunity to load the boat if you missed out on the first run-up. So guys, I am going to be making my thesis based on the facts, and I am going to start out by telling you that it could be either way because it really is all going to depend on what retail does from here. However, there are certain things technically that I'm seeing and that have to do with the options chain and market makers getting smoked that make me think that this is going to run back to the upside tomorrow. So please listen to the entire thing so you can gain the facts and know where I'm coming from and know how this thesis is going to play out. I will also state that I only have a 50 share position currently in BBBY. I have played options in it previously. However, the implied volatility got way too high, way too fast, and I wasn't touching it for calls or for puts or anything. I wasn't going to risk that because when you have an IV like that, guys, there's something called IV crush that can kill you. And I wasn't going to be part of that. However, depending on how that looks tomorrow, I may just have to jump back in. Not sure whether the IV is going to go down as an event of the rapid sell-off or what the scenario is going to look like. But if it does, I may have to nibble because I'm going to tell you straight out, I'm going to show you the Ortex, I'm going to show you the Fintel, and guys, nothing has changed. The short interest is still through the roof. Ryan Cohen, retail is acting like he was the god of this play. No, no, no. His actions had absolutely nothing to do with this. The only thing that caused this to run and the only thing that caused this to literally bottom out was retail and retail's actions and reactions. Guys, you know what? It's an interesting thing to watch, but retail is their own worst enemy. That's the honest truth. And I'm sorry to say that, but it's a fact. And they don't really think beyond what they read when news hits. And in a way, I kind of find it funny but sad. And you know, I was literally sitting here laughing, not laughing like, ha, retail got screwed. Not at all. I felt sorry for people that bought at the top. I really did. I was laughing at the disbelief that retail could honestly believe one person with 9 million shares that sold could have any effect on this play other than actually helping there be volume to buy into. Just like if they were to do an offering right now, it would kind of help to some degree. Yeah, the news of it would be what hurts. But guys, when there's, 300 million shares or, whatever, multiple times the float being traded each and every day that this is running, 9 million shares is a drop in the bucket. It doesn't matter. It didn't matter one little bit. So I'm going to show you why. I'm going to show you the entire thing so that you guys have it and can get it drilled into your head. And please know that I'm on retail side. I want you guys to come out ahead in this game. Personally, my stake is a whatever. I'm leaving it the way that it is. I might buy some more on this dip. Who knows? I'm going to take it for what it is and see how the actions roll tomorrow because I'm not doing anything tonight and I'm not selling my shares either. You know what? Because I see an upside to this. I see a potential slightly downside potential to a gap fill that I'll talk about. Whether that happens now or, way down the road after this thing, which could potentially still squeeze, especially tomorrow, whether it happens or not. So, we'll see. But I'm going to give you the facts and I'm going to tell it to you like it is. So, giddy up. Nothing I say is financial advice. Let's get into it. All right, guys, this is the Schedule A, and this shows you exactly the number of shares and the amount that Ryan Cohen, RC Ventures, LLC, sold at. So, guys, as you can see, the selling took place between $18.68 to $29.21. And the majority were on the lower level of the 20s, right? So that happened on August 16th and August 17th. So Tuesday and Wednesday, guys. None of that was today's price action at all. And in fact, the price action, guys, when this happened was during run-ups, as I'm going to show you later. So this price, he was selling into the runs. You can tell that by the price going up as he's selling, okay? He did not sell into the price dropping. This was both times into the run up, okay? And we're going to look at the chart. I'm going to show you that. So it had zero effect on it. Go back and look at the volume on those days, and I assure you that this actually helped because it gave liquidity into the market. It allowed it to run because, you know, without that, there wouldn't have been enough shares to trade, right? So things would have been really, I mean, yeah, maybe the price action could have gone a little bit higher for demand. I don't know, but that's neither here nor there. My point is, him selling did not affect this. The only thing that affected this play was what retail did in their reaction to the article and the filings. And I think it's because retail doesn't take the time to think things through, which is why if you look at Twitter, you're going to see more experienced traders like Gavin tweeting out things like, if BlackBerry, I always call the sticker BlackBerry. It's Bed Bath & Beyond. If Bed Bath & Beyond continues to have high short interest, I might just buy into this. And you know what? That's exactly what I said. Because, guys, the play's not over. At least it's not over unless retail says it's over. But I'm going to show you why retail has an opportunity tomorrow for this to continue. So let's get into it. Okay, guys, according to Ortex, the short interest is still at 53.91%. You'll notice that they don't have a cost to borrow in here because there were no shares available today to loan out. So therefore, you don't see that there's a borrow changed or a cost to borrow because there was nothing for them to lend. So this was not valid. We will take a look at Fintel and see what they are stating. Okay, guys, according to Fintel, the short interest of Bed Bath & Beyond is 41.86%. And today, 58.02% of trades were done in the dark pool. There are 300 shares available to borrow. That's it, only 300 shares after that massive sell-off. And according to Fintel, the cost to borrow is now down to 56.41%. Let's see if they have any failure to delivers due. All right, guys, so for tomorrow, we would be looking at Friday. Sorry, I had to count. 3,887 shares are due. If they have not already filled those, well, I'm guessing in the after hours today, that probably wasn't so hard for them to do. However, you'll notice that they are filling those at a loss because they paid $4.73 back on July 15th for these shares. Now, on Monday, there is 79,958. So, guys, it's not that there's a substantial amount of failure to delivers, but there's not shares available. There is a massive, massive gamma ramp up for tomorrow. So anything is possible. Okay, guys, looking at the chart, as you can see, we had a pretty massive sell-off from $18.55 all the way down to $10.50, where it seems to be finding support and trying to base out right now. Now, depending on what happens tomorrow and whether the Fed continues or whether people just decide that weren't aware of what was happening after hours to sell out of their position early, this could continue to sell off. However, I think it's more likely that it is going to curl up and it may start climbing again. Now, guys, there are many reasons for that. Obviously, If you were in my space call earlier, then you heard the other side of it, which was why I invited StockTwits to co-host with me, because he took advantage of the situation, seeing the writing on the wall, and entered puts. And guys, you can't blame people for playing both sides of it. And it, puts ultimately don't really affect the price of the stock. They rather, are a hedge. It's a bet on the stock that it's going to go down, just like when you buy a call option, you're betting that it's going to go up. Now, the only way that it does affect the price is obviously as, something's selling off, the lower it goes, they're hedging, for, just like with calls, they're hedging for those puts that are now in the money. But guys, there is also a benefit to that, because people that buy puts are willing, or that sell puts are saying that if the stock goes below X price, I am willing to buy it. So if people bought puts for, let's say, or people sold puts for $15, then they may just be buying those shares come Friday close if that does not close above $15. And that's just my example. Or if it closes below $15, then they have to purchase those shares at $15. So, guys, there is some things that can cause this to run tomorrow. But most importantly, it's the Ortex info that I already reviewed with you. Because, guys, there's no denying they continue to short this on the way up. The short interest has risen. It has not fallen. Now, another thing is when Ryan Cohen was selling off those shares, right? That happened on the 16th and the 17th. So, guys, he was selling into this, okay? His maximum sell price from that sheet, let me take a look at it again. Okay, guys, all of his sells were between $18 and $29, which means, quite frankly, he was selling on this run-up, and it's still, all of them got absorbed, and it even balanced out, right? And then the rumor, and then people took profits up here, causing the sell, right? But still, it managed to maintain, back down to this low, this candle, which was at $18.53. So right around the same area where we closed today, right? All of that maintained. Now, he could have continued selling into this rise again that occurred. That is very likely because he sold on both days. So again, was likely selling up into this, right? You get that high of 30. Guys, the lowest it made it to here prior to that rumor was $23.50. Okay? All of this, and my point of this is, all of this is retail. Retail was causing this pump. Retail was causing this squeeze, not Ryan Cohen. Ryan Cohen just helped us by adding shares to the market for people to buy up. Nothing he did hurt this in any single way, guys. You know who hurt this? You guys aren't going to like me for it. It's not going to be a popular decision. Retail hurt themselves because they let the media rule their actions. Or they let, whatever vision they have of Ryan Cohen. Apparently there's rumors that Ryan Cohen was the god of BBBY and causing the squeeze. Guys, he has nothing to do with the squeeze. Nothing. Absolutely zero. He didn't help it. He didn't hurt it. He bought those shares way back in January and February. Possibly something in March too, right? According to that first filing. Nothing happened January, February, or March. In fact, you know why he bought more in February? Because it sold off more. That's why. Let's take a look at the price action. Oh, wait, but before I go there, here's my other point. Guys, all of this, Ryan Cohen was done selling, okay? Then that filing hits and the news spreads, and you guys, you caused this. Retail. Retail caused this, okay? Retail dumped it. Ryan Cohen had nothing to do with it. That filing caused people to panic sell for no reason. Then, guys, today we seem to regain, I would call this a consolidation day. Perfectly consolidating, okay? Dipping, that's fine. Starting to come back up, guys. We were actually making good progress because for you guys, in order for you to get this squeeze tomorrow, the $20 calls really need to go in the money. So hopefully retail pulls it together between now and tomorrow and creates some massive buying pressure and can buy back their shares cheaper and get this running again. Because if you get those $20 calls in the money tomorrow, you better believe that you're going to start a gamma ramp going here. And that's what caused this, guys, too. Not just that massive FOMO buying, but also the gamma, because hedge funds need to hedge their bets. They need to hedge, or market makers need to hedge for those calls and those puts going in the money, so it works the same way on the way down. Now they're selling off because all those calls are going out of the money. Not to mention that not only that, but people who had stop losses set also triggered this, okay? Now all that's balancing out. Now we have an opportunity tomorrow to curl this back up and continue the run. And guys, whether it continues or it doesn't, that's up to retail. But my point is, you have a massive opportunity. Like I stated in my call, I don't really care. I only own 50 shares of BBBY because I didn't get in on time. However, I may be buying some down here because now I see an opportunity, or I may buy some contracts tomorrow, depending on what the price action does and where they're at. Because quite frankly, when I looked at it, they were too high. And guys, I did have calls, rolled them up last week, I think it was. But, you know, they expired. I just took my money and was done. And went to go enter them again. But the volatility was too high. I wasn't touching them with a 10-foot pole. Same thing I looked at when I saw puts. The volatility, it made no sense why they were so expensive. So I said, not touching it. So I didn't. But guys, now I see opportunity again. But I'm not going to be the only one that sees opportunity tomorrow. Let's talk about the max pain, because that's also going to be something that's going to play into what the price does tomorrow. Okay, so let's get into that. All right, guys, just so you can see, Ryan Cohen, according to the filings, initially bought his position between January and March, right? So somewhere around this price zone, he was buying. And my reason for pointing this out to you is because this was losing money on him, right? It did run up a little bit, right? Up until April, the highest it got was, similar level, 26.95. Actually, this candle's higher. Let's see. I wonder if it's going to be the same. Sorry, I'm trying to get my cursor to go over it. The highest this one went on this candle, that's not right. 16.20. Sorry guys, it's showing me 18.20, but that's clearly not correct. So I don't know if it's hitting the one below it. Oh, here we go. $30.06. Interesting. Check it out. What did this candle do? $30. Guys, these two candles, literally, it met resistance right here. That's why that candle dropped where it did. And if you go way back to this one, and again, I'm not in BlackBerry. I mean in Bed Bath & Beyond. I'm sorry, I keep calling it that. I'm not in Bed Bath & Beyond other than 50 shares. That's it, because I already knew this was not a good setup for me. 29.34 on that candle. I was just comparing back. But if you see, there's a pattern here of where it goes. Now, guys, on a positive note, let's see. I wouldn't be surprised if we came down and filled this gap here at some point. But we filled, it looks like there may be a little one right here that we could have filled. But there's a gap to the upside, okay? I want you to look at this right here, because not only is there this gap down here, so let's say tomorrow sell-off happens and people sell more, okay? There's a gap fill from $8.29 to $8.63. So not a very big one, a small one, but there's still a gap. But there's a bigger gap to the upside. Now, there's my positive for you. The high of this candle is $20.81. And the low of this candle is $22.50. So guys, there's a gap filled back up to $22.50. And as you can see from our other examples, gaps always get, well, not always, 98% of the time I would say, get filled. Gap here, right? Finally gets filled down here for both of those, right? On that ride down, it got filled. Then there was the gap here, got filled on the way down. So, oh, there's another gap over here too, guys. But that got filled here, going up. See? So now we have just this gap to worry about. And part of it's gotten filled, but not a few cents. So there's a few cents left to get filled that may or may not come back for it. If it does, I would suggest that that is where we find our support. So sadly, not that far away from where we are right now, $8.29. So it might come down a couple dollars more, or it may not. But that's, I'm trying to give you the best and worst case scenario. Or it may continue to move up tomorrow, in which case $22.50 is what I'd be looking for, because that's where you have the gap fill to the upside. And guys, if it does make that climb, I would suggest that it will continue to move up. You have the perfect gamma ramp. And I'm sorry, I know I was going to get into something else and got distracted, but I wanted to show you this because this is very important, and this is bullish to me that we have this. And even knowing that there's a gap down here, it's okay, guys. Worst case scenario, let it come down a couple more dollars, fill that gap, then you don't need to worry about it when you ride it back up. Now, even with it falling down and finding its support somewhere around here, right, in that $10 range, $9.74 currently is where we are sitting with a 20-day SMA. So it may find support there. We also have the 50-day moving average, which would give us the gap fill. Okay, I use the 48, which is $7.42. The 50 is either a few pennies higher or lower, depending on how it goes in. But guys, there's support along the way. You know, it did bump through the 13, but we're still in an uptrend as far as the daily chart goes, even with a pullback. So we moved up very, very quickly, but we can do it again. This was not Ryan Cohen's doing. As you can see, yeah, this accomplished this maybe, or led to this. But guys, he didn't sell here, interestingly enough, right? Because he probably couldn't. Well, I know he couldn't because of the short sale rule. But it happened again. It can happen again. And I assure you, eventually it will come back and fill this. I shouldn't say I assure you, but there's a good chance, is what I'm going to say. It will come back and fill this gap. So that is a bullish indicator. Now, let's take a look at Max Pain for tomorrow, because that's going to also help tell us where this stock market makers want it to close. Okay, guys, this is the Max Pain chart, and I am at maximum-pain.com, and this and StockZero will both give you the Max Pain. So if you look at the strike price for 8/19/2022, this was just created today at 6:50 p.m. It's currently 6:52, and options are closed, so there's no more buying and selling. The Max Pain is $20. Now, what that means is that market makers are going to try to get this stock to close as close to $20 as possible. Guys, that's because this is where it creates the most gains for the market makers, creating the Max Pain for investors, hence the name Max Pain. So, as you can see though, once we hit $20, what starts happening? Just like after hours, how we're going down and you notice how quickly it was selling off, it's because market makers are unhedging for all of these options that have now gone out of the money. But the same thing's going to happen tomorrow when they have to start hedging for them going into the money. As you can see, the majority of call options are as the price goes higher and higher, right? The put to call ratio, rather. So what that means, guys, is the higher the price goes, the more they have to buy and the more shares that they're going to need to deliver. And prior to the sell-off, which my guess is a lot of it's going to get absorbed anyways, the utilization was 100%, and I'm going to guess it's still probably around 100%. There is still massive opportunity to squeeze this stock tomorrow, especially if we get that $20 strike in the money and we can start moving up further from there. And remember, we have that gap fill all the way up to, what did I say, something around $22, right? So guys, the more that goes in the money, that's the more amount of calls that's hedged for, that's the higher this price can go. Tomorrow, we still have a massive opportunity to squeeze the crap out of BBBY. And again, you know, I'm doing this video for you guys. I honestly have 50 shares. Like I said, I don't care. I'm just trying to put something out there because I feel like retail is really getting suckered on this play right now. And I think it's because, guys, unfortunately, retail is very reactive. And let me tell you something, please don't believe the FUD you read in the news. You're better off not reading it, because 9 times out of 10, it's partial truth. Now, yes, Ryan Cohen sold his entire share. But again, as I just proved to you, him selling it and him buying it had nothing to do with the price action. You, my friends, had everything to do with the price action on the way up and again on the way down. Retail can ride this right back up tomorrow if they so choose. Choice is in your hands, guys. Anyways, that's it. I wish you all the best of luck tomorrow and have a fabulous night.